Hey there, I want to give you an example of this week's Excel exercise. So we're going to use Excel for double declining depreciation. And I've got an Excel worksheet here that I've set up that's very similar to your exercise for Connect. So double declining simply means to take the normal depreciation and double it so that you can accelerate the depreciable cost or the tax write-off effect for equipment. Straight line depreciation would be to take an asset and divide it by the life of the asset and do the average depreciation each year for that life. For instance, if I took a $10,000 asset, it'd have a 10-year life. Each year the asset would be depreciated $1,000. So double declining would tell me that the first year's depreciation would be a $2,000 depreciation amount. So I've set up this formula and we're going to work this out together for double declining, because your instructions tell you that you have to use the formula for DDB in column D for each one. Alright, so the way that this is set, you have the cost of the asset as $125,000. So to put that into here, we'll use the equal sign and we'll find the value in that cell, which is C5, and press the enter key. In that case, then the formula would be across the board. We'd use the DDB for depreciation expense. So to find the DDB, I can do that one of a couple of ways. I can click the formula button or insert function button here. I can go to the formulas tab. I can look up the formula in the depreciation. Most of you will use the function button and you'll type in depreciation to find the type of depreciation by clicking the go. We're told to use the DDB formula, double declining balance. And if I double click it, this argument box will open for me. And I'll simply put the pieces of the argument into this box. So the cost of the assets listed here, I'll select that one. The salvage value is going to be this $15,000. I'll list it and click there. The life of the asset is going to be 5 years. And the period that we're figuring the depreciation for, it tells us in this explanation right here to use the same as the life, is period 1 or year 1. And when I select that, I'll get a pop-up that will tell me what it's going to be, and if I click OK, my formula is solved. So the first year's depreciation is $50,000. Accumulated depreciation is going to be this year plus whatever was last year. So in this case, I didn't have last year, so it's simply equal to this year's depreciation. The book value is going to be the asset value less this year's depreciation. So the formula for that one is typed up with an equal year 1 or beginning value minus current depreciation. Press enter. Just like beginning value on January 1 for year 1 was here, beginning value for year 2 is going to be found at ending value for year 1. So in this case, this is equal to, type your equal, ending value from last year, press enter. Now, a couple of ways. I can use the fill handle and copy the formula down, and as long as I've used absolute references that work, or in each case, go back and find the DDB formula once again and fill in my argument. So cost is not going to change, it's here. Salvage is not going to change, it is there. Life won't change, it is there. What does change each time is the period or the year for the calculation. So this is year 2, and if I type OK, it will be 30,000. Accumulated, this case, is going to be a little different. So this is going to be equal to this year's depreciation added to previous accumulated depreciation, which tells me that book value now is going to be less this year's depreciation. So I'll type in the equal sign, book value on day 1, subtracting current depreciation, and enter. And I would follow the same formula again and again and again. Day 1's value is going to be ending year value from the previous year. Depreciation expense is going to be calculated using the double declining formula. Cost will be the same. salvage will be the same, life will be the same. The period, however, is going to be year 3. And when I type in OK, you'll see this year's depreciation is $18,000. Accumulated is going to be the 18 plus last year, and book value is going to be beginning value less this year's depreciation expense. Year 4 is going to be the ending value of last year, and going back to my DDB formula once again, cost will be the same, salvage will be the same, life will be the same, the period is year 4, and accumulated depreciation is going to be this year's depreciation added to the previous accumulated depreciation. Book value now is going to be beginning value minus this year's depreciation. And here's where you got to stop and take a look, because book value is $16,200 from the end of last year. If we were to calculate double declining depreciation, we would get more than salvage value of $15,000. So I'll show you what it would come to. If I use my formula once again, I'll take cost, I'll take salvage, I'll take the life, and the period is going to be the 5th year, and you'll notice that this is blank underline, or this is 5 and this is 5. However, $1,200 is what I get. The reason I get $1,200 and not actual amount value is because I cannot take the cost in residual value beyond what's stated in salvage. So when I add up accumulated depreciation, I can only get to $115,000 total. So this is equal to this year's depreciation plus last year and total. And then when I look at book value, this is equal to beginning year value less this year's depreciation, or $15,000. This number can never be more than this number. And if you're not using Excel to calculate it, you can actually find that this will be a much higher number. So this is why we say use Excel and use the formula for DDB. I hope this helps. Let me know if you have any questions about this particular exercise.